Welcome to PowerInvesting.com. My name is Tommy Lackey, and this is the weekly sector review video. We're going to go through each of the 11 sectors today very quickly, but just realize right now you can still go to the website, go through each one of these pages yourself at power-investing.com. So let's go ahead and get started and take a look at kind of where things are. We start here with the equal weight sector rankings, and here on ours, we have energy, financials, materials, consumer staples. Now, when we look back at the market weighted in the last video, the macro video, we looked at the market rate and the equal weight. Consumer staples was further up, but when we look at our own equal weight subsectors, or sectors, energy, financials, materials, then consumer staples. Again, still very defensive at the moment, but it's a slight different arrangement. Now, one thing we notice here real quick is that the big jump that was made in financials this week in 3-month relative strength and in energy, both of them made very strong moves for the week. Obviously, the only two positive on the week comparing to all of the other sectors. And then you see utilities, probably surprising a few, dropped pretty decently this week, came off the highs as not really a favored player right now. Kind of strange in the inflation environment, but it had run a decent amount and just succumbed to the selling this week, as a lot of times we have towards the end of some selling climax areas. The stronger stuff can take a hit with everybody else. Now with equal weight subsectors, we'll look real quick and see that energy is up at the top now again, had very strong weeks. If we sort it by the weekly strength, we can see it's oil and gas, energy, regional banks, banking, thrift and mortgages, industrial metals, aerospace, defense, insurance. So a lot of financials and energy with a little bit of industrials and materials kind of sprinkled in there. But if we search just by RS movers, we have still a lot of these top guys, but a couple others that jump in here is like aerospace pops in there, and communication services, media and entertainment. I've mentioned for a few weeks now that I was wondering when this one might take a little bit of a turn. So I'll mention as we go through the sectors some of the subsectors that have been stronger, and we'll just quickly spin through each page. The energy sector has taken back over the top spot. It's got a pretty strong looking equal weighted chart here. Higher lows, higher highs, coming back up to test those highs again. RSI in a fresh bull range. And the breadth really strong here with the summation index just now turning back up. Okay, so this is obviously our top ranked sector at the moment. Lots of comparative relative strength this week, especially made strong moves across the board. You can see it in pretty much all of our measures. The oil and gas production is the leader there, and then consumable fuels. There's a lot of charts in here that look like they're breaking out of some lower bases. In kind of internal basis, so it's somewhere I would definitely take a look at. From the ETF standpoint, RYE has been a good leader there. XOP is another one we want to take a look at, and AMLP, for those who want more of the longer term dividend type play, has performed pretty well too and perked up a good bit this week. Now again, strong weeks this week, so you make the decision depending on how long you're going to be there, whether you want to wait till it moves sideways or pulls back a little bit, or whether you want to enter for a longer term type position. Now our second one's the financial sector. It moved up a good bit as well, and as we can see, it's also right near its highs on the RSI chart. New RSI bull range there. So we're definitely not seeing everything weak, and we're seeing a big rotation in those two areas, especially last week. Again, more of the inflationary play. We'll see if it how long it lasts, but right now it is basically showing in both the strength of the price and the participation in these particular sectors, and the relative comparatives are heading up and made big moves in financials this week as well. Now after financials, we move into materials. In the materials sector, in the financial sector, as far as ETFs, a lot of them are very strong. A lot of them have already broken out, so it's something you want to keep an eye on. KBWP was one that I looked at, and EUFN, the European, because in the macro video I pointed out that the Europe stocks were looking better than some of the US stocks, so it might be interesting. But a lot look the same, like XLF, KRE, IYF. Those ETFs look very similar. When we go down in the materials chart, you can see here again, this one had outperformed a little earlier, already broke out back here and then pulled back in, and now it's formed a little bit of a cup oriented and then pulled back the last few days. Now materials has been showing strength in the overall chart, so it's something that from a breadth standpoint it is stronger than the markets, but not substantially stronger just yet. Industrial metals is one of the big standouts in the materials and in the materials sector. We take a look as we pull on down here to the ones, industrial metals and basic materials, are kind of your standouts recently. Chemicals is kind of your steady Eddie type, and then precious metals has continued to underperform. From an ETF standpoint, I kind of like this pick. XME, it looks like it's nearing a breakout. Pick also was kind of interesting to me because it's not up at the highs, but it looks kind of like an internal base breakout, and this is the producers, metal and mining producers, so something I might take a look at there. RTM was also been a strong materials, the equal weighted play for that one. Next sector we move into is consumer staples. Again, I'm doing these in the order of their relative strength at the moment, and consumer staples is still up near these highs, but not in an ultimate breakout. It did that back in June area from an equal weight standpoint, and now it's working its way back up there. So even with the outperformance you've seen in a lot of the larger plays, it doesn't mean there's not still room for some of the internal stuff to move. The breadth is pretty strong here comparatively to the markets especially, and then the summation has already ran pretty hard. Now this pullback could just be a slight resetting, so it's something to keep an eye on there in staples. Again, from a longer term standpoint, it's still moving up on a relative comparative versus everything else and not showing many new lows in this week's difficulties. Now, household products, food staples, retail, and food, beverage, and tobacco. Household products took back over the lead. Some of the food and staples retailing pulled back some, Costco and some of those names, but BJ is one and a few others in there that still look like they have potential for good strength. Now the consumer staples, ETFs here, again, the equal weight I think is a good way to kind of look at here, since it's the larger plays that have ran, unless you feel like it's just going to be the big boys that get the money, which unfortunately has been what we've seen some so far. Now when we move into the real estate sector is the next one. I've been a little concerned about it pulling back, and it pulled back a little bit, but that's because everything did, not just because of itself. However, on a whole, it's still stronger overall and is already still above the breakout level from all this summer stuff. It's been kind of volatile recently, and this pullback could come down further, but it's something you want to keep an eye on, especially if we think, again, the yield area is going to be an important area. The breadth here is, again, outperforming the markets, and something that shows that the strength has been there. It's not rolling over yet, but it is not really jumping out as one of the big performers, losing some relative strength points this week. Utilities sector kind of moved down the middle. It lost a good bit of relative strength this week, and as you can see, it had a pretty weak week. It had 4 tough days into Friday, and then Friday tried to catch itself right above this other area. It is an RSI positive reversal if we can extend back out of this. So it's not that we give up on it, we just recognize that something that has been a previous leader has pulled back in relative strength quickly. So we watch to see if this is just a quick reset, which is what it's looking like at the moment, or whether it breaks below these lows and continues on down. But right now it looks like it may be a quick reset, and you might find some opportunities in that area this week. The breadth still remains strong overall from a mid and long-term standpoint, with the short-term pulling back decently. The relative comparatives here aren't great. They have turned up recently, but they're not showing a ton of strength. So it's one of those areas to where utilities, you got to really think that the markets are going to stay pretty rough here for a little while for this to be where you feel the outperformance is going to come from. It has been, again, a leader, so it's not going to be huge volatility, so it could be a place that people are hiding. Any of the ETFs here are going to be pretty similar. I did like the INFR, one of the infrastructure ones, when I was looking at them, and then the same thing again, the equal weight, the RYU. Next sector we go into is industrial sector. When I got into industrial sector, I realized that this one had already broke out and then pulled back, and now it's just been kind of consolidating. It pulled back previously, and on this one this week looks like it's trying to hold up better than some other spaces and above these previous high line here. So this is one that we want to kind of keep an eye on. The places that I saw here was industrial goods and also one other one, industrial goods and transportation were your two, and aerospace and defense is just starting to kind of perk back up. You saw it made a big jump in relative strength this week. Now as a sector overall, I'm going to move back up. The breadth is kind of mediocre. It's right with the rest of the market, so it's not a leader now, but inside there, those three areas, aerospace and defense moved big this week. Industrial metals was also a mover, and then you have transportation, which has kind of been the leader. Now I looked at the comparison between transportation IYT, which is cap weighted, and XTN, which is market weighted, and I would probably stick with the cap weighted at this point based on their ratio charts and how that one looks to be breaking out to the upside for IYT, or in favor of IYT. Now we go over to the next chart, the consumer discretionary chart sector. It's been down here, but it's got some areas in it that are showing some strength, automobiles being one of them. This chart though looked like it couldn't make a new high on this last little move and is trying to roll back over. So unless it holds this 40 here, again, this is not a place you want to concentrate or focus a lot on. It's got breadth that's worse than the markets overall, and the relative comparative is not really looking great. The only thing it's turned up against is the QQQ, and that's just because that's been so weak. Now I thought it was going to show a little more strength up to now, and it didn't. However, I will say hotels, restaurant and leisure, and automobiles are two that I kind of felt showed some good potential strength this week and last week, and have better setup. Not going to have time to go through that in this video, but it is something that you can go to the website and go to their particular pages and take a quick look at. From the consumer discretionary ETF relative rankings, you can see cars has jumped back up, the automobile scenario, which could be a very good play there. PEJ, also the entertainment and leisure and entertainment has hopped up there as well, and RTH, the equal weighted, your equal weight retail. I'm sorry, not equal weight. Sorry, RTH is just a retail. Surprising that one's still up there. I'm not as excited as I looked through it with retail as I am with some of this. RCD was what I was thinking of, was the equal weight scenario. So look at some of the ETFs in here on this page and go to the links and check out their trading view charts. The next, information technology, and this is one that really has flagged out pretty ugly. Now is down at the bottom rail of this. It is still making higher lows slightly, but again, no telling what's going to happen today as we start the week. Now it's currently, CFG is below zero, but that doesn't really mean much. It can drop a good bit, but when we zoom out a little bit, you're still looking at the bottom of this range being towards the bottom of this area here, so the 1645 area or something like that with our particular equal weight index. The breadth here has been pretty sick and continues to move down, so again, not showing us any strength on any measures that we're looking at right now. Hardware has been the leader in this area. Semiconductors took a pretty good hit. Semiconductors were the king for quite a while, took a big hit this week, and hardware held up slightly better, but I'd even mentioned it last week as being one that people didn't pay as much attention to. The ETFs in this particular space, ETFs in this particular space, networking, the semiconductors, all those still up top, iDrive, LEGR, payment processing, some of these still have some potential for strength that had really tough weeks. You want to look and see if they hold at the immediate support you can see on the charts, or if they continue to break down. Obviously, 1 week doesn't make the trend, but it certainly did some damage, and it's going to need buyers to step in and want to kind of push this back up. I'm not sure when that is going to happen. Communication services, I talked about, it was one that has been kind of flattening out while the rest of the markets have been dropping here. Media and entertainment is the area that really jumped out the quickest, but it is something to pay attention to. Telecom is there as a big safety play, but it's really it is outperforming some, but it's one of those areas again to where I don't expect big movement out of it, other than just kind of meandering higher as the markets are running into trouble. If the markets do start to perform better, this is an area that's underperformed for long enough and is flattened out here in the recent action that it might be ready to start to pull its way back up. Now, its breadth is just poor to mediocre still as well. Short term's getting better, so you still need to be somewhat cautious, and the relative comps have not turned, but in the very shortest turn. But like I said, they flattened out recently after being very big underperformers, have started to flatten out and might be looking to turn higher if the market can find some legs. Media and entertainment is definitely the leader, then telecom. And then our final sector is utilities. Utilities is basically one that was a strength leader to some extent. I'm sorry, healthcare, not utilities. Sorry, healthcare. Healthcare was not a leader, has been somewhat of a laggard for quite a while, but really took a bad hit this week as it ran into this resistance in the previous range lows and then rolled back over. Now we're at the lows of the last pullback. This is in a bear range and has moved back below 40 in the RSI, so there's really nothing there that's telling us for a change. Similar to technology, same thing with all these other breadth measures. They're getting low, but none of them are at extreme washout type levels, but this is obvious where we're seeing a lot of the weight in the market right now, so it's something we've got to be conscious about with those two particular sectors. Healthcare, if you really do need an area, you're going to focus more on the pharmaceuticals, because as you can see here, they have, when we look at the healthcare, pharmaceuticals are the leader, and then medical equipment is held up next best, but neither one of them are wonderful. But when you look at the charts, they're okay. Healthcare services has taken a big hit recently, and then biotechnology has been a weak leak, which has a lot of holdings in it, which is weighing on the overall equal-weighted sector. So when we look at this particular set of ETFs, so I would look more equal weight, and more pharmaceutical and some of the larger stuff, and then might still go with the cap weighted in this area until we see more improvement in the downside type stuff. So that gives us all the sectors. Took me a little longer than I thought, but hopefully that gives you a quick review. Please remember you can run to power-investing.com and look through these in more detail at your leisure for now, and we will be coming out with a lot more stuff in the coming weeks. Hope you have a great week, and I hope this helps you get started.